Welcome to the Personal CFO. Today we're going to be talking about international investing, and specifically we're going to be talking about when people look at international investing, well, the world is a big place. What countries are we talking about investing in? And we're going to look at a chart that shows how expensive are countries relative to each other, and then how expensive are countries relative to themselves. So let's dig in on what I mean there. So here's a chart that looks at a whole lot of countries. The US is in there right here. And we can see how expensive countries are relative to each other. In other words, that's that orange-red looking color. That at the very top is the most expensive country, right? And then at the very bottom is the least expensive country, given its price to earnings ratio. In other words, how much you're paying for each dollar in earnings. And so all the way at the top is Denmark. And so you're paying about $25 per dollar in earnings, per dollar of Denmark's earnings. All the way at the bottom is Brazil. So you're paying substantially less for every dollar of Brazil's earnings. Okay, so Denmark is the most expensive. Brazil is the least expensive. And you can see all the other countries in between ranking how expensive the countries are relative to each other. But there's also these little green dots. And the dots are helpful because it tells us how expensive countries are relative to themselves. So in other words, the green dot represents the average price that you'd pay, the average price to earnings that you'd pay for these countries. And as you can see, going to Denmark again, while it is the most expensive country relative to the other countries, it's also relatively expensive to its own history. And so while it's trading at a 25 price to earnings today, it actually trades closer to a 20 over the last 10 years. So it's expensive relative to others, and it's expensive relative to itself. All the way down at the bottom, you have Brazil, which is the orange-red bar is the lowest, which means it's cheapest relative to other countries. But if you look at that green bar, it's actually lower than its 10-year historical average. So it's cheap relative to other countries. It's also cheap relative to itself, okay? Where the price you're paying per dollar in earnings is lower than you've historically had to pay. And so as we look at all these other countries, right, if the green dot is over to the right of the orangey yellow bar, it means it's cheap relative to itself, okay? And if we look at the US, we can see, hey, we're kind of close to the top, which means we're a pretty expensive country, and we're about in line with our last 10 years. So we're not really cheap relative to ourselves or expensive relative to ourselves. So what does this mean? What it means is these are two important components to look at when you're looking at international investing and saying, where am I putting my money? Is it cheap relative to other countries? Is it cheap relative to its own history? Because what we do know is when you're buying future cash flows of companies in different countries, right, the better price we get, in other words, the less we can pay for those cash flows, all else being equal, the better our returns are over time. And that's not to say that anything at the top is going to do great or poorly, or anything at the bottom is going to do great or poorly, but we want to have context and understand what we're owning and why we own it. I hope you found this helpful, and as always, thanks for investing your time with the Personal CFO.